All right, let's think about this for a second. In the absolutely massive world of digital assets, what if the future isn't about thousands of different projects all competing, but instead, it's just about 5 big winners? That's the whole idea behind a pretty powerful, data-backed thesis we're going to dig into today, the Magnificent Five, and the claim that they're going to capture pretty much all the future gains. So let's break down what that actually means.
I mean, you know how it is. The crypto space is this just universe of thousands and thousands of projects. And yeah, it's exciting, but it's also kind of chaotic, right? So how on earth do you spot the real long-term winners from all the short-term hype? That is the biggest challenge for literally anyone trying to navigate this market. And it's the exact question this Magnificent Five thesis says it has an answer for.
So here's our game plan for today. First, we'll talk about the crypto maze and define a really important term, market alpha. Then we get to the good stuff, the Mag 5 thesis itself. We'll meet the protocols, break down this wild 90% claim, and then wrap up by looking at what this all could mean for the future.
And this really is what we mean by the crypto maze. You've got this constant flood of new projects popping up every single day. Trying to tell the difference between a fleeting trend and a project with real fundamental value? Well, that's the whole game, isn't it? It's all about finding those winners. But man, the field is more crowded than it's ever been.
Okay, so to really get what this thesis is all about, we have to understand one single concept that pretty much drives all of finance, and that is market alpha. Now, I know it sounds like jargon, but trust me, it's not. It is the entire goal of this strategy. It's the prize that these 5 protocols are supposedly fighting for.
So what is it exactly? Well, to put it really simply, alpha is just outperformance. Imagine the entire market goes up by 10%, but your investments go up by 15%. That extra 5%? Bam! That's your alpha. It's the proof that you made a smart pick, that it wasn't just dumb luck. It's about actively beating the average, not just floating along with the current.
And this really breaks down the 2 core philosophies you can have. On one side, you're actively seeking alpha. You're hunting for those investments that are going to crush the market average. On the other side, well, you're just accepting what's called beta. That just means you're passively tracking the market, just moving along with it. This whole thesis we're talking about today, it's a playbook for the people who are trying to seek alpha. Which of course brings us to the main event, the Magnificent Five thesis itself. The best way to think about it is like a compass. It's a data-backed path that's designed to point you directly to the handful of assets that are predicted to generate almost all of the market's alpha.
So here it is in a nutshell. The core belief is that future outperformance, it's not going to be spread out evenly. Not at all. Instead, it's going to be incredibly concentrated. We're talking about a tiny handful of dominant protocols, the base layers that everything else is built on, capturing the vast, vast majority of all the alpha the market has to give.
All right, so the big question is, who are they? Which protocols actually make up this so-called Magnificent Five? Let's meet the contenders.
First up, and this is probably no surprise to anyone, is Bitcoin. I mean, it's the original digital asset, right? It's the bedrock of the entire ecosystem. The whole case for it capturing alpha is pretty simple. It's seen as the most secure, the most decentralized, and the most recognized store of value out there. It's basically digital gold in a world that feels more and more financially uncertain.
Okay, next up is Ethereum. And if you think of Bitcoin as digital gold, then Ethereum is like the decentralized world computer. It pioneered smart contracts, and it powers the huge majority of everything from DeFi to NFTs. Its potential for alpha really comes down to its massive network effect. I mean, it just has more developers, more apps, and more money locked into its ecosystem than literally any other protocol.
And protocol number 3 is Solana. This one is all about speed and scale. Solana was built to tackle Ethereum's biggest problems, the high fees and slow transaction times. So its claim to future alpha is based on its ability to handle these super high-speed applications that just aren't really possible on other chains. The idea is that it could be the one to capture that next big wave of everyday users coming into crypto.
So the thesis names Bitcoin, Ethereum, and Solana. That's 3 of the 5. But, and this is a really crucial point, the source material we're looking at doesn't actually name the other 2. They're kept under wraps. So that leaves a pretty big piece of the puzzle missing, right? And it forces us to focus less on the exact list and more on the principle behind it. This idea of intense concentration, even if the full lineup is still a mystery.
Okay, now we get to the boldest part of this entire thesis. Because it's not just about who they think is going to win. It's about how much they're going to win by.
And it all boils down to one single, kind of staggering number. 90%. Just let that number sink in for a second. This isn't just a big number. It's a claim of near total dominance. But it's really, really important that we understand exactly what this 90% is referring to.
And this is maybe the most critical distinction to make. The claim is not that these 5 protocols will be 90% of the market's total value. That's not it. The claim is that they will capture 90% of the market's alpha, the outperformance we were just talking about. So in other words, almost all of the winning is expected to be concentrated in just this tiny handful of assets.
I mean, this chart just lays it out perfectly, doesn't it? On one side, you've got the Magnificent Five, projected to gobble up 90% of all the alpha. And on the other side, you have thousands, literally thousands of other projects, all fighting over the scraps, just the remaining 10%. It's a really stark prediction of a winner-take-most kind of future.
So let's just imagine for a minute that this thesis turns out to be right. What would that future actually look like? I mean, the implications of that level of market concentration would be, well, profound. For investors, for developers, for the entire ecosystem.
So the key takeaway here is really a call for focus. If you're an investor who's actually trying to find that alpha, this thesis argues that spreading your bets far and wide, well, that might actually be a losing strategy. It suggests that the real outperformance won't come from betting on a bunch of long shots, but from concentrating on the very few protocols that are positioned to consolidate all that power, value, and ultimately the returns.
But this leaves us with one last and pretty critical question. You know, the entire promise of crypto, the whole reason it started, was built on this big idea of decentralization. So if this thesis is right, and all the power and value ends up consolidating around just 5 protocols, what happens to that dream? You've got this really powerful tension between a cold, hard investment strategy on one hand and the founding ideology of this entire space on the other. And that's a conflict that is nowhere near being resolved.